This year has been a pretty rough one for Canadians, including myself, and investing into 2020 has been pretty interesting to say the least. A lot of companies and businesses, both big and small, have closed up shop or delayed their plans to expand and grow to later 2020 or even going into 2021. And because of all of this, investing is looking pretty attractive. And with many stocks still sitting at very, very low prices, and there's still a lot of bargain price stocks out there, I think it's a perfect time to invest in some good solid REITs as of right now. In today's video, I'm going to be sharing with you guys my top 3 REITs to look into for the month of August 2020. I'm going to be sharing with you guys some REITs that I think are very, very worth buying coming over the next couple weeks or going into the next month or so. But before I show you guys my REIT picks for the month of August, I just want to talk a little bit more about REITs. And if you guys are a big fan of the channel, you guys know that I'm a huge fan of buying REITs and I really love Canadian real estate. And I think a lot of Canadian REITs right now are really undervalued. If we look at interest rates, as of right now, they are at a historic low, which means I think that REITs going into the future are going to probably rise a lot in price, and the Canadian real estate market is probably most likely going to grow. And traditionally in a low interest rate environment, savings accounts and GIC accounts will not really give you the best yield. So a lot of people will be turning to dividend stocks and REIT stocks to get some nice investments that are going to grow that passive income and help them grow their investments over time. And I think REITs can really benefit from this friendly borrowing environment, so to speak. Alright, so let's get into the REITs and let's take a peek at some good old-fashioned Canadian real estate. So the first REIT we're going to talk about is Northwest Healthcare REIT. So before doing this video, this REIT was actually completely new to me, and after doing some research and looking over Northwest Healthcare REIT, this actually looks like a pretty solid REIT, and I think this is going to be a really good healthcare based REIT going into the future. So for starters, Northwest Healthcare has exposure to over 170 healthcare properties across Canada and internationally across the world. So over the course of the past few months, Northwest Healthcare has actually dropped quite a bit in terms of share value. Before the pandemic, they were sitting at around $13 to $12 Canadian a share, and they took a pretty big drop. But as you guys can see here, going into the second quarter or so of 2020, we can see that there's a nice little rise, and Northwest Healthcare looks like they're on their way to being back up. So I still think they're a pretty good stock to invest into, especially since their share price is starting to recover really nicely. And at the time of recording this video, Northwest Healthcare property real estate REIT is currently trading at $11.35 Canadian on the Canadian stock market as of right now. And as of right now, I personally feel that a healthcare-based REIT or any kind of healthcare-based investment is a wise investment to pick or a wise investment to invest into, because right now the pandemic has really pushed a lot of healthcare companies and has really forced people to invest in those companies. So I think if you can find some good healthcare based companies and stocks to invest into, I think they have a lot of potential to do well into the future. So investing into healthcare-based real estate makes a lot of sense. Northwest Healthcare has a current dividend or current monthly dividend of 0.6 cents per share and has a dividend yield sitting at around 7% as of right now when I do this video. If you think that there's a future in healthcare-based REITs, then adding this REIT into your portfolio or your tax-free savings account or your RSP might be a good idea. Alright guys, so that was the first REIT that I wanted to talk about in this video. The second REIT that we're going to be talking about is Northview Apartment REIT. Northview Apartment REIT is one of the largest REITs on the TSX of today. And at the beginning of the pandemic, Northview seen a pretty steep drop in their share price, but since then they've made a pretty good recovery and they're now almost sitting at the same price they were before the pandemic. Northview has a nice price to earnings ratio of 9.1 and a nice price to book value of 1.1 as well. This REIT has been around for a while and was founded way back in 1995 and holds properties all across Canada and the world. Northview Apartment REIT currently trades at about $34 Canadian on the stock market exchange as of right now of doing this video, and they have a dividend yield of about 4.67% that is paid out monthly as well. And the nice thing about Northview Apartment REIT is they have a very nice, secure, stable dividend. And if you guys want a nice REIT that has a nice, stable, secure dividend with the potential of growth that comes with real estate, then I think this REIT is definitely one you might want to look out for and consider adding into your portfolio. Overall, I think Northview Apartment REIT is a solid REIT to add to your portfolio, and I'm definitely going to be keeping a watchful eye on this one going into the future. Now I wanted to save the best for last in this video, and the last REIT that we're going to be talking about inside this video is Dream Industrials REIT. Now, Dream Industrials is probably a REIT that you might have heard of before, as it's probably one of the more popular ones. They operate high-quality industrial properties across Canada, the United States, and even in Europe. And even though the shares of Dream Industrials has taken a pretty big hit and still has a long ways to go if they want to recover, I look at this as a buying opportunity because they have a very nice balance sheet and it looks like they're already slowly on their path to recovery. So I think this puts Dream Industrials REIT in a perfect situation that you might want to buy into. I honestly think Dream Industrial REIT is a bargain buy right now and a good opportunity to buy. And if you buy right now, it looks as if the shares will probably continue to climb going back into 2020. And going into the future over the next couple weeks, I'm definitely going to be adding this REIT inside my portfolio as I currently do not own it. Dream Industrials has a nice monthly dividend of 0.5 cents per share with a dividend yield of 6.22% that is paid out monthly, and it currently trades at $11.25 Canadian on the Canadian stock market exchange. And as you guys can see, like I've already mentioned, even though Dream Industrial REIT has taken a bit of a dive here at the start of the year, it looks like they're recovering nicely, and I think there's still lots of room for it to grow. So overall, guys, I think all three of these REITs are good additions to add to your portfolio, and you can't really go wrong. But if I was to pick a favorite one out of all these three, I'd definitely take a peek at Dream Industrials, and I think that's the one, probably the REIT I'm going to be focusing on the most going into August. So if you guys enjoyed this video, please let me know what you guys think in the comments, and be sure to like the button and subscribe to the channel if you guys want more Canadian-based content. Let me know which REIT inside this video that you're the most excited about, and if you're going to be buying one of these REITs, please let us know in the comments below. Thanks for watching, guys. Have yourself a good day, and take care.